Hello everyone, and welcome back to another episode of Simply Wall Street's Market Insights. My name's Michael, and this week we'll be talking about investing in weight loss and diabetes treatments. Shareholders of Eli Lilly and Novo Nordisk must be pretty stoked with the last few years of performance. The latest generation of GLP-1 medications have resulted in massive gains for those two pharmaceutical giants. But the revolution may only just be getting started, as a pipeline of similar treatments are going through clinical trials. These drugs could offer similar results to patients suffering from other conditions and have far-reaching effects on other sectors and the economy. We're going to spend the next 2 weeks covering the investment opportunity and risks for these companies, as well as some of the industries that could be disrupted by these drugs. Before we dive into what happened in markets this week, here's our quote of the week from Christopher Davis. A 10% decline in the market is fairly common. It happens about once a year. Investors who realize this are less likely to sell in a panic and more likely to remain invested, benefiting from the wealth-building power of stocks. Now, let's dive in. Here's a quick summary of what's been going on in markets this week. Firstly, Barron's covered how investors have dumped Snowflake on its weak outlook. What's our take on this news? Investors care about the future, not past performance. Snowflake actually beat estimates, but billings and the sales outlook disappointed. This added to negative sentiment that has been building for some time. Last week, Berkshire Hathaway disclosed that it had sold its entire stake. Buffett acquired the stake before the IPO, which attracted attention because Berkshire makes very few tech investments or pre-IPO investments. The company made a small profit on the investment, unlike many of the investors that invested after the IPO. Investors are also beginning to wonder how much of a moat the company really has and whether AI is an opportunity or a threat to the business. Lastly, have a look at the difference between Snowflake's cash flow and its GAAP earnings on the company report. The massive level of stock-based compensation turns a reasonable cash flow margin into a negative 30% profit margin. Next up from the BBC, OpenAI signs multi-year content partnership with Condé Nast. What's our take? If you can't beat them, join them. The deal will allow OpenAI to train its models on content from titles including Vogue, Vanity Fair, and GQ. Content from these publications will also be featured within OpenAI's products. While some publishers are suing OpenAI for using their content, others are lining up to sign deals with the AI startup. Time Magazine and IAC's Meredith have also signed deals with OpenAI. Clearly, the disruption of the media industry is an ongoing phenomenon, and publishers are going to have to keep reinventing themselves to stay in business. Next up from Reuters, AMD acquires server builder ZT Systems for $5 billion to enhance its data center AI capabilities. What's our take on this news? Data centers are becoming more complex as compute power increases. AMD hopes that by combining its technology with ZT Systems' expertise in server and system design, it can offer data centers more comprehensive solutions. This will help AMD differentiate itself from NVIDIA and will also allow it to compete for market share with the other companies that supply products to data centers. Next up from CNBC, US payrolls for 12 months to April revised down by 818,000. What's our take? The labour market might be weakening faster than previously thought. This was the largest revision by the National Bureau of Economic Research since 2009. However, it was widely expected and came in more or less in the middle of the range of estimates. It means that the US economy created 30% fewer jobs in the year to April than previously estimated. Whether the estimates were too high at the beginning or end of that period isn't clear, and would make a big difference to the trend. This means the Fed's actions and statements will be more closely watched than ever. Some argue that the Fed has more of a case now to cut in September by 0.5% rather than just 0.25%. Next up from the Financial Times, China's $70 billion property rescue plan is getting off to a slow start. What's our take on this news? These stimulus policies may not be as effective as first thought. The People's Bank of China and state banks are providing up to $70 billion in funding to local governments to start buying up the country's huge inventory of unsold homes and apartments. These would then be leased to citizens. Only about 5% of that amount has been lent out, as lenders and borrowers struggle to agree on valuations. Furthermore, potential borrowers aren't sure they can lease the homes at rates that cover the interest. rates on these loans may have to be lowered close to zero, in which case China may be entering its own ZIRP era, otherwise known as Zero Interest Rate Policy era. And lastly, from Reuters, new ETFs are being launched at a record pace in the US. What's our take on this news? Investors still love their ETFs. This year, an average of 50 new exchange-traded funds have been launched each month. That's only a little higher than last year, but substantially higher than the 38 launched each month in 2022. The universe for ETFs has grown with the addition of cryptocurrency ETFs, so perhaps the number isn't too surprising. However, it's worth remembering that new funds are launched when there is demand for them, not when the upside for the strategy is optimal. Early in the year, we covered some of the pros and cons of ETFs and how to make sure you know what you're getting into. You can find a link to that piece in the article. Now let's dive into the main piece, the GLP1 Revolution. Over the last 2 years, and almost in parallel with the generative AI boom, surging sales of Ozempic and Wegovy have helped Novo Nordisk overtake LVMH to become Europe's most valuable company. Eli Lilly followed with its own versions, Mounjaro and Zepbound. This chart illustrates the effect on sales of its growth product portfolio and brings the term blockbuster drug to mind. GLP-1, which stands for glucagon-like peptide-1 agonists, stimulate the body to create more insulin, which helps lower blood sugar levels. The first GLP-1 drug was approved for the treatment of type 2 diabetes nearly 20 years ago. Patients found that the drug also reduced their appetite and food intake, resulting in weight loss. In 2014, a newer variant was approved for weight management. The game changer was Novo Nordisk's semaglutide, which only needed to be injected once a week rather than once or even twice each day. Semaglutide was originally approved for type 2 diabetes under the brand name Ozempic. Rybelsus, the version that can be taken orally, was approved in 2019. In 2021, it was approved for weight management under the brand name Wegovy. Tirzepatide, Eli Lilly's own GLP-1, was approved for diabetes in 2022 under the brand name Mounjaro. It followed up with Zepbound for weight loss, which was approved in 2023. Now let's talk about the $100 billion opportunity. Although Ozempic and Mounjaro were indicated for diabetes, they were both being prescribed off-label for weight loss before the weight loss brands were approved. The positive results meant demand was already there long before Wegovy was approved. Type 2 diabetes affects over 500 million people worldwide. While the newer GLP-1s are very effective for diabetes, there are other ways to manage it. The impact on weight management was also more pronounced because few treatments have had widespread success. Obesity is more prevalent nowadays and a leading cause of type 2 diabetes, cardiovascular disease, and other conditions. Weight management is therefore preventative and reduces the risk of numerous other conditions. It is therefore crucial to reducing overall healthcare costs and can also lead to higher productivity for individuals and economies. GLP-1 drugs are currently being developed and tested for a long list of other conditions, including sleep apnea, heart failure, chronic kidney disease, peripheral arterial disease, osteoarthritis, Alzheimer's, and cancers. Most of the major pharmaceutical companies, as well as lots of small research firms, are developing treatments targeting these conditions. Estimates of the potential GLP-1 market size vary widely, and they range from around $70 billion to over $150 billion in the next decade. Most analysts expect Novo Nordisk and Eli Lilly to continue to dominate the market for the next decade. The projection below from Morningstar includes GLP-1 drugs as well as other diabetes and weight loss treatments. The reality could look quite different from this chart, as there are a few hurdles and limitations to growth. How and when these hurdles are overcome will shape the outcome for the overall market and for individual companies. Novo Nordisk is currently trading at around 47 times earnings for the last 12 months and 32 times estimated earnings for the next 12 months. Eli Lilly is trading at 118 times its historical earnings and 43 times its forward earnings. Those elevated valuations imply that investors believe consistent earnings growth will occur for quite a few years. In the short term, the only constraint to sales growth is the ability for these companies to keep up with demand. Both companies are ramping up capacity at an impressive rate, and at some point supply will catch up with demand. The question then becomes about demand. So, let's talk about potential limitations to growth and demand. First up, there's price. One of the most important factors in the global pharmaceutical industry is the price of medication in the US compared to elsewhere. In the case of drugs like Ozempic, a month's supply in the US costs as much as $1,300, while it can cost less than 10% of that in Europe and elsewhere. This isn't unique to GLP-1s though. For many pharmaceutical companies, the US accounts for most of the revenue and even more of the operating income. Here's where Eli Lilly earns most of its revenue in this chart below. In the last quarter, both companies earned over 65% of their revenue from GLP-1s in the US, and with such a wide price differential, most of their profit too. This means further penetration of the US market is crucial to their earnings growth. Many of the current forecasts assume tens of millions of US citizens will be taking GLP-1 drugs in the next few years. Whether or not that can happen at the current price is the question. Novo Nordisk's CEO is due to testify before a Senate committee in September to justify the current pricing. Regardless of the outcome of that hearing, the number of patients that can afford the treatments may be limited. Employers have reported that GLP-1 drugs have led to much higher health costs, and healthcare premiums are expected to rise sharply. Only so many people can afford to pay the out-of-pocket expense if insurers don't cover the cost. The next limitation to talk about is the side effects and persistence. The second limitation on demand concerns side effects and how likely patients are to continue with injections long enough to be effective. Recent reports have shown that 1. Nausea is a very common side effect and causes some patients to stop the injections. 2. Many patients experience muscle loss unless they increase protein intake and exercise. And thirdly, some studies showed that the majority of patients stopped the injections before the full benefit was achieved. The reasons for stopping included side effects, cost, and difficulty sticking to the schedule of injections. New versions of the drugs are expected to address common side effects, but until they do, employers and health insurers may be reluctant to keep paying for treatment. There may be a long-term benefit to employers and insurers, but only if the treatment is effective. The bottom line here is that the addressable market may be very big, but it might not be at the current price point. It's typical for the price of a new product to come down as volume increases, but it may need to come down quite quickly for demand to keep rising. Ultimately, there will be new competitors in the market too, so competitive forces will also lead to lower prices. But that's likely to be a few years away. Until then, affordability and efficacy may play a bigger role. So, what's the insight? Develop your narrative on GLP-1 stocks before investing. The market for GLP-1 treatments is evolving, and each company's earnings potential will depend on capacity, prices, volume, and competition. Creating an investment narrative will help you determine the price you are prepared to pay for a share and expect to earn a return, aka a fair value estimate. It will also help you monitor the company's progress and decide if or when it's time to exit. An investment narrative helps you tie the story behind a company to a fair value estimate. You can create a narrative on the Simply Wall Street platform, and the fair value will show up on your watch list alongside the current price. A narrative consists of catalysts, assumptions, risks, and a calculation of fair value. We can use the example of GLP-1 makers to illustrate these elements. So first, let's talk about the catalysts. The catalysts within the narrative are the primary drivers of a company's revenue and earnings growth, or decline. Industry catalysts concern the market for a company's products and the competitive landscape. For GLP-1 manufacturers, firstly, the market is immense, and while there are competitors, their products are still going through clinical trials. Secondly, one of the two companies may have a better product, which could matter when supply matches demand. And thirdly, demand is strong, but may be limited at the current price. As for company catalysts, these concern the company itself and its products. These catalysts could include the entire product portfolio, capacity, and the pipeline of new drugs being developed. Next, let's talk about assumptions. Your assumptions express the catalysts in terms of sales revenue and margins over the next 3, 5, or even 10 years. You will also need to make assumptions about other factors like capital expenditure, share buybacks, and the tax rate. Finally, you would need to estimate a PE ratio that you think the market would pay for the share at that point in the future. This would depend on the growth rates leading up to that point and the likely outlook for the company from that period onwards. Finally, let's talk about the risks. There are always risks to a narrative. These are the events that may occur and could derail your narrative. For GLP1 companies, the risks to your narrative could include the emergence of long-term adverse side effects from the drug, a competing company could develop a breakthrough drug that shows far better results, and major changes to the US healthcare system. Finally, once you've got all these down, you can put it all together by calculating your estimate of fair value. Don't worry though, the narrative builder will help you do this. Just plug your assumptions of revenue growth, profit margins, and PE ratio into the calculator, and you'll have your fair value estimate. If you develop a narrative and decide the share price is too high, your time hasn't been wasted. The share price could fall, or the narrative might change and imply a higher fair value. The work you put in now might help you spot a great opportunity in 2 or 3 years' time. Next week, we'll cover some of the companies with GLP-1 drugs in late-stage trials and some of the smaller companies developing other variants for a range of conditions. We're also going to look at some of the other industries that could be disrupted by GLP-1s, most notably food producers and other healthcare companies. Now let's wrap up with the key events during next week. The main event this week will be Nvidia's second quarter earnings, due out after the close on Wednesday. On Monday, US durable goods orders for July are due. The index is forecast to be down 0.3% for the month after a big 6.6% decline in June. On Wednesday, Australia's consumer price index for July is expected to be 3.7%, down slightly from 3.8% in June. On Thursday, US GDP data for the second quarter will be published. This is the second estimate and is forecast to be 2.8%, up from 1.8% in the first quarter. US initial jobless claims are forecast to be 242,000, up from 232,000 earlier in August. And on Friday, Euro area inflation data will be published. The previous estimate was 2.6%. US personal income and spending and the PCE price index will be published. Spending is expected to show a slight decline, with incomes remaining flat. The core PCE price index is forecast to be up 0.2% month on month. Besides Nvidia, there are quite a few prominent cloud software companies reporting and a few retailers, including Salesforce, CrowdStrike, PDD Holdings, BHP Group, SentinelOne, Viva Systems, Dollar General, Lululemon, and MongoDB. That's all for this week's Market Insights. Thank you so much for listening. And until next week, invest well. Simply Wall Street analyst Richard Bowman and Simply Wall Street have no position in any of the companies mentioned. This article is general in nature. We provide commentary based on historical data and analyst forecasts only using an unbiased methodology, and our articles are not intended to be financial advice. It does not constitute a recommendation to buy or sell any stock and does not take into account your objectives or your financial situation. We aim to bring you long-term focused analysis driven by fundamental data. Note that our analysis may not factor in the latest price-sensitive company announcements or qualitative material.